Hi there, and welcome to our latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Well, Greece has been consigned for the second time in as many months to junk bond status, and could Britain be heading the same way, with news they are likely to face some hefty spending cuts in the near future? In local news, could our second biggest meat processor, AFCO, soon have a majority shareholder in the form of Tallies, who are better known for their fishing interests? And has Mei Wang finally been pipped at the post with news that she and her Chinese backers have failed in their court bid to bypass the Overseas Investment Office in the ongoing Crayford saga? But first up, I talked to ASB Chief Economist Nick Tuffley. Well, Nick, welcome to the program. Looking at our currency over the last week, there's been a fair bit of movement, especially against the greenback, where there's been some gain, hasn't there?
Yes, I think the key event in terms of lifting us against the US dollar was last week's monetary policy statement. We have had the start of the interest rate tightening cycle come through, and even though the move was relatively well telegraphed, it did firm the exchange rate. We also had other developments offshore which propelled the currency up against the US dollar. Australian employment data out later on that day, on Thursday, was quite strong, and that propelled the currency up. So last week, events certainly strengthened the currency. This week, with what's happening in Europe, slightly more positive tone overnight. We've seen some softening of that come through.
Well, if we look at the other major currencies, apart from the greenback, anything of note with the likes of the Aussie dollar or the pound, which we have just touched on? Much to exporters' horror, we are actually gaining ever so slightly, aren't we?
We've seen the Australian dollar strengthen on its employment figures. More recently, I think perhaps for exporters, some encouraging signs for us that the pound and the euro very recently have started to strengthen a bit as well. So it's really coming down to this waxing of waning of whether people are happy with what's happening or unhappy. So when you have those risk-on nights, we tend to see the euro strengthen, the pound strengthen, we tend to fall against them. When people are concerned, we tend to be appreciating against them.
Now, as I said in my introduction, Moody's has just downgraded Greece's status to junk, and Standard & Poor's did this in late April. Has the second downgrade reignited fears about the EU and the solidity of that currency?
It did briefly. I think the thing is, when you've got a second rating agency downgrading, it's less of a shock. So on the night, it took the edge off what was actually a lift in equity markets and a lift in the euro. So the reaction in Europe was quite mild. It was a bit more pronounced in Asia, where we saw the euro fall a bit more. But we've actually had some encouraging news overnight, where a number of other governments were issuing bonds, and they actually were very well received. So Spain, Ireland, two of the troublemakers, you could say, in Belgium had a lot of interest in their bonds. So that's actually quite encouraging, coming hot on the heels of what we had out of Greece.
Yeah, you'd think a lot of institutions would be quite shy of buying government bonds, particularly in those sort of pigs countries, as they're called.
Well, that was certainly the issue ahead of the announcement of the rescue packages. So, look, one night of auctions is we can't start a trend on that, but I think it is important for the future that we do still have that private sector interest and readiness to buy up government bonds, because there's going to be a lot of them coming over the next few years.
Yeah, indeed there will be. What about equity markets? Did they firm or take any encouragement from this uptake of bonds?
Overnight, we actually saw the US equity markets rally about 2%. So
that's
what
pretty
happened?
Healthy, isn't it?
That is good. Mind you, some of the moves we've seen, 2% can be quite modest. But certainly, the equity markets took heart out of that news overnight from Europe.
If you stand back and take a look at the data, particularly from last week, there was a suggestion that a global recovery can actually plough really through the problems in Europe, at least to a certain extent anyway. Is that the case, do you think?
Yes, the actual global outlook's not too bad. Now, we have a lot of the news focuses on Europe, and that's not great, but we are seeing Australia looking good, we're seeing Asia looking good, even the US looking good. So from a New Zealand point of view, where half our trade goes into the Asia-Pacific region and about 10% into Europe, you know, what happens in Asia is quite important. But for New Zealand, I think a key risk is we've got to watch the financial sector and the contagion through there. That's probably the more important channel to be aware of.
That's the word of the moment, isn't it? Contagion.
Contagion, yes, not a nice word.
Now, I believe the Brits will soon need to make some decisions about when to withdraw their monetary policy stimulus. Is that correct? When do you think they're likely to do this?
May still be a way off. There is a lot more concern that inflation might be lifting and more of a problem in the UK than what it has been. So that's something to be wary of. But you've got that fiscal policy, monetary policy interaction. If they start reining in the fiscal policy side, that takes some of the pressure off monetary policy to do the work.
Well, it certainly sounds like they are going to get really tough with some austerity measures. So that fiscal side is probably be the main tool they'll use.
Well, we'll certainly do expect to see them being a lot tighter. Now, we do have on the 22nd of June a mini budget effectively coming out, an emergency budget coming out. So I think a lot of the decisions, particularly for the Bank of England, are on hold until then.
Right.
Certainly, the more the fiscal policy does the work, the less monetary policy has to do.
Well, look, thanks very much for that, Nick. Up next is business presenter Corin Dann, who joins our panel to discuss the business headlines making us take notice. Welcome back. Well, Corin, thanks for joining us here on Money Talks. Now, you've been listening from the sidelines to what we've been talking about in the first break. Do you have anything to add, particularly about continental Europe and Britain?
Yeah, well, I mean, I think it's important to look at what actually are the impacts of what's going on in Europe. And I think the point Nick raised about the financial sector and the impact there is quite a significant one, particularly when you think Reserve Bank Governor Alan Bollard just, this week, raising the issue around funding costs for New Zealand interest payments and that huge external debt we've got. And surely the risk from Europe, primarily it seems, is not so much a trade risk, given that our trade with those southern European countries, in particular the likes of Greece, etc., seems to be reasonably small. Right. It does appear to be funding costs, and that obviously was the message that the Reserve Bank Governor was giving in some ways, that we are exposed to risks because of that external debt, and that is a concern. So, you know, it is something we have to watch if those credit markets freeze up again from another big shock. And it looks like, thankfully, they're starting to ease back a little bit in Europe. It's maybe just coming into a slightly more stable period in this crisis, which I think is going to go on, the sovereign debt crisis. But I do think that is an area where we will be exposed, and that is one we need to obviously work on, something that the Reserve Bank Governor has raised a lot. The other area, I think, is to look at China. In particular, we saw some strong export numbers come through out of China. I think it was early last week. They were leaked to Reuters initially, 50% growth or something for May. Now, that seemed to me to be a bit of a catalyst for both the Australian and New Zealand dollars to get a bit more confidence coming back in, because they had been really hit hard, in particular the Australian, over the course of the last 3 or 4 weeks or so. So to see that figure came through just gave a bit of confidence that perhaps, hang on, China isn't being as impacted as perhaps we thought it might be by Europe. Therefore, by extension, in New Zealand and Australia got a little bit of a lift. But you have to wonder, though, whether in fact it will be impacted a little bit more in the future, and maybe up until now things haven't quite played out that way. But what I'd suggest, I suppose, is that Europe still is a financial crisis. It hasn't quite become an economic crisis yet. And I guess with Fonterra having such a growing presence in China and the free trade deal, we've got our foot in the door. So most definitely. So it can be done. They've led the way, certainly.
Now, Corin, still with you. We'll come to you shortly, Nick. When Fonterra sent out voting forms to its shareholders so they can vote on changing the constitution to allow share trading between farmers, but it also allows in non-farmers to buy a different share called a unit. How will that work? Well,
essentially, farmers will be able to sell the rights to the dividend part they get in their payout. They can sell the rights to that. They'll also be able to sell essentially the capital movement in the share price. So they would, if the share price goes up, potentially they would lose that. They wouldn't lose, though, the share as such, and thereby they wouldn't lose also the voting rights.
But are we talking about dry shares here, or shares?
Well, no, hang on. Let's just separate that out, because we're talking about all their shares, essentially, their bundle of shares, their ability then to sell on the dividend from that share, not the share itself, the access to the money from the dividend and any capital movement in the capital gain in the share. That what they then sell into the trust or the shareholders fund, whatever it's called, is then investors can then buy units in that trust separately, and they can be obviously anybody from public. I know Fonterra talks about retired dairy farmers, etc., but obviously it's anybody, and that could potentially, as I think Rob Cameron had talked about, be